Bam. Good evening. How are you? I've got the mic thing in my way tonight. I'm sorry. Good Lord. How are you? It's 7:15, August 31st, 2022. I am John Schenk. Who's John Schenk? Well, I'm a real estate broker. I am the manager and founder of Deer Realty in St. Louis, Missouri, small residential firm. We help buyers buy homes and sellers sell theirs. In the evenings, when I'm not showing houses, when I'm not doing the real estate business, I like to get online and I like to talk about the news of the national news and what's going on in the real estate world, provide commentary, opinion, insight into how I see things as an everyday broker. Sometimes we talk about pop culture. Actually, every day we talk about pop culture. We talk about how things relate to the real estate market. We talk about mortgage rates. We talk about the things that you would want to know if you want to go buy a house tomorrow. Should you buy a house tomorrow? Should you wait? Why? Should you sell your house tomorrow? And that's just what we do. That's the show. If you like what you're seeing, you should probably subscribe. I lost a subscriber. I had 99 subscribers. I was so close to the 100 subscriber mark, and then I lost one. I don't know if it was a fake account. I don't know if it was somebody that I had said the wrong thing and they left. I don't know what it was. All I know is that I am without one subscriber. And so now I'm at 98 subscribers, and I'd really like to be at 100 because then I could do my 100th subscriber show. You know, I might have done my 50th subscriber show like almost a year ago. It's been a long haul. It turns out not many people want to talk about real estate all day long, nor do they want to chat about it at night. But you know what? I don't care. We're going to keep going. There's got to be someone out there that's interested in what I've got to provide or not. I don't know. Anyway, got a good show tonight, I think. The things on the menu are, we're going to talk about why I didn't show a particular house tonight. We're going to talk about, I should pull up my notes. I'm going to pull up my notes because then I know what we're going to talk about. We're going to talk about real estate agents and their personalities, how that might help or hurt a deal. What to do if a survey reveals an encroachment. What I'm going to do, we're going to talk about something I saw on Twitter today. It made me laugh. Talk about mortgage rates, Google Trends. We're going to look at Wingstop tonight. Wingstop. We're going to talk about Compass. We've talked about Compass as a brokerage. I don't have anything against the agents themselves. The business model to me seems a little bit off, but who am I? I'm just a real estate broker in South St. Louis. We're going to talk about how one should properly deal with a fence that's been installed on your property by your neighbors. And then maybe if we get lucky, we're going to talk about why mortgage lenders would be going broke in what was one of the hottest markets we've ever had. Why is that? That doesn't seem right. Now, that's if we get lucky. I don't know if we'll get to all those things tonight. That's a lot. I guess the best thing to do would be to get started if we wanted to have any chance of getting where we've said we want to go. Sound fair? Let's get started with this nugget. Real estate agents and their personalities. Now, I don't know if you know me. I don't know if you feel like you know me, but I feel like I'm pretty easy to get along with as long as you don't do things that I would consider crossing the line of decency as a real estate agent. Okay. So I wouldn't say there's unwritten rules, but there are certain things that you would not want to do if you were trying to do a deal with me. One of those things is if you agree to something, okay, then I expect you to follow through. So if you say, I'm agreeing to repair this, then I expect you to agree to repair this. If you are an office assistant of a real estate agent, I expect you to treat me with kindness and respect. If you come across as trying to show me up as the agent, that's not going to go over very well because see, your job is to sit in an office, okay, and file paperwork that I don't want to waste my time with. Okay. That's your job. You get paid every week for that. I actually have to go out and find clients. I actually have to talk to people. Okay. I actually have to do those things. And so I don't need you to tell me, I don't need you to give me guff, basically. I don't need you to negotiate on behalf of your agent. Okay. Let your agent do that. So office staff, I have complete respect for you. Just don't try to talk down to me, because that's not going to go very well. But there's all kinds of personalities in real estate. There's all kinds of thoughts on how you sell a house, how you buy a house, how you help your clients best. All kinds of thoughts, all kinds of philosophies. There's no school you go to learn to be a real estate agent. I mean, you get your license, but none of that stuff helps you find one client. Okay. Not one of those things. So that doesn't help. It helps you maybe not to get sued, but again, real estate agents don't provide legal advice. So that doesn't really work. So you're kind of stuck with this. I don't know. You have to learn it yourself, or you have to watch someone else do it. And so the good thing is if you have like some initiative and if you care, you'll figure it out. You'll figure out what to do and what not to do over time. If you try to do it like the first 6 months you're in the business, you're going to have problems. I think, but I've read books where somebody's, automatically become the greatest agent ever. I'm a little suspect when I read those things, but whatever. But your personality matters, and how you deal with other agents matter. We used to talk about like your reputation. Like, you don't want a negative reputation out there, because that'll hurt your buyers or sellers. That'll make it so that they won't want to use you. They will hear bad things about you. I don't agree with that. This may be controversial, but I see a lot of agents that are absolutely jerks. I mean, just the worst people that you could ever imagine. And they flourish in real estate. They lie to their clients up to their teeth. They think nothing of it. They're horrible people. Okay. And they do a lot of business. So this idea that you have to be like a good person and, a great real estate agent because of that, I don't see that as being true. I hate to burst your bubble. So maybe in the 1980s, your reputation amongst other agents was important because it would trickle down to your clients. Nowadays, I don't think that's true at all. I think that you could get away with pretty much murder and you could still have a flourishing business in real estate. Like, your reputation means nothing, because very few people ever, if you call, like, let's say you're a buyer and you see somebody's name on Zillow and you call them and they seem nice. How are you going to know if they're a jerk? Okay. Maybe they're putting on a front for you. We have these agents that I like to call sharks. They don't have any feelings in any way. Like, and they're not afraid to be rejected. They're not afraid to do anything. They don't blink. They literally don't. I mean, they were just sharks, and they will put on whatever, they're like chameleons. They will put on whatever personality it takes for you to be happy with the deal. And they will say whatever you want to hear. It's just it's amazing what they can do. They're very skilled in what they do, but that's just not who I am. I wanted to go over this deal that I just got done with. I got done with the deal, and literally I talked to the other agent on the phone one time during the entire deal. The rest of the time she texted me every once in a while. Is that how I would want to do a deal? No, I would prefer to talk to the agent over things so that we can make it the best possible transaction for my buyers and my sellers. Now, I'm also doing another deal right now where I'm talking to another agent, call them all the time, and we talk and we go over things, because we both understand that this particular deal that we're working on is tough. There's a lot of things about the deal that are like sticky. It's not just that house in the suburbs that just sold like 5 years ago and is now up for sale again. No, it's not that easy. So we've been back and forth, and I think that's the way to go. But, you will never know when you're a buyer or a seller how your agent treats other agents, how your agent treats other agents, how they work with other agents. Let me just tell you one of the things that happened to me. I was representing a buyer, and we wanted to look at a house. Okay. And this is how this works. It's karma. And I emailed this person and I said, hey man, can I go see this house? It's still listed as active. And I never heard back from the guy. And I was like, my buyer kept asking me, what do you know about this? And I called him and never got a voicemail. I got nothing. Fast forward about 6 months. I'm listing a house for sale now. This same agent has a buyer interested in the house, and he calls me And the first thing he says is, hey, man, I had the Rona. I apologize. I was down for a couple days when you emailed and called, and I couldn't get back to you. I'm very, very sorry. Why did he do that? Because it matters. This particular house I had listed, I had 20 some odd offers. Okay. And if he was an agent that had one of the top offers and somebody else had one of the top offers, say they were the exact same, it's up to me to tell my sellers, hey, this agent here didn't do a very good job the last time I had to work with him. This other agent I may not have worked with, but at least they didn't ditch me like this guy did. He knows that. So he immediately apologized. Now, have I heard from him again? No. Will I? No. Not until I do another deal. It's the nature of it. There are like thousands and thousands of agents in St. Louis. Okay. That's not up for debate. But there's only so many of them that actually do enough work to make it interesting that you actually learn their names. And so I had a house again where I was representing the buyer, and this agent said to me, or this agent had this house listed, and sure enough, she put an offer in on one of the houses that I listed maybe a couple months ago. And the first thing I said when I reached out to her is that, yeah, I showed your house. I showed your condo in Oakville at the time. And I said, hey, that gave me an opportunity to say, hey, it was a nice house. That gave me some sort of credibility when I was talking to her. So the relationship matters. Now, are there agents that I would just not want to talk to, like ever after doing a deal with? There's been agents where I've barely gotten through the deal without just losing it. And there's some agents that I've just lost it on anyway because they're just jerks. They do bad things. They do something that screws with my clients, and I'm an advocate for my clients. I'm going to be the one out there like fighting for my clients. It's not about me. And that's the other thing that's bad is there'll be times where your buyer or seller puts you in a bad situation. One of the ones that I think is most funny is when you're negotiating a deal and your buyer, say you make an offer and you know that there's no other offers on the house. And so your buyer automatically tells you, tell them that this is the final offer, that you will not pay one dime more. And so you go in there and you end up, you tell the seller, this is our final offer. We will not pay a dime more. And then the seller's agent's like, okay. So they go back to their sellers and they write a counter offer, and it's not anywhere close to your number. And then they say, here you go, you can take it or leave it. And so now, even though you said you're not taking another deal, you end up taking this, offer that you didn't particularly think is great on a counter. And you look bad because you were the one that said, I refuse to pay a penny more. And yet you did. That's another thing. Like when you talk about buyer love letters, I think buyer love letters are great. I have no issue with them. But I've always found it kind of funny when you want to get a house. So on the last house I sold, I think I had 5 buyer love letters. And they're all nice. No issues with the way they wrote them. But it's like you say that this house is the best house ever, and you really can picture yourself living in it forever and all these things, and your family's going to grow up here, and you're wishing all these things, and then it gets to an inspection period, and all of a sudden you ask for 14 things, or else you're leaving the deal. It just makes you look bad. It makes you look bad. And so I've had to deal with that. I mean, I know it sounds crazy, but one of the best ways to find a good agent is to just go back and, talk with somebody that your friends use. Find somebody like myself who's going to try to be honest with you as best I can throughout the process. And again, like maybe my personality isn't for you. I mean, think about it this way. Like I'm just going off the top of my head here. I have 98 subscribers. I had 99 and somebody left overnight. Now, maybe they didn't like my personality. Maybe they were watching my videos and decided, you know what? Hey, I don't like that guy. He's kind of a jerk. I mean, it happens. It happens. I know I've lost out on deals like to list houses because somebody was more charismatic or something, they just like the other person better. It's very hard to accept that. Like in all of this, in all of the world, you want to believe that your expertise, you want to believe that your knowledge, you want to believe that your personality is a winning one, and it's better than anyone else's. And then when you go as a salesperson and you ask somebody for the listing, and then they go with someone else, and you don't even know about it because they didn't even call you back or text you or anything, didn't give you a heads up, and now you see it in the MLS. Someone beat you. Someone more talented than you, someone more attractive than you. Somebody beat you. And that's another thing that's tough to deal with. Look, I have gotten comments online about my looks. Now, there's nothing I can do about my looks. I lost my hair when I was like in my mid-20s. Okay. It happens. All right. I'm a little bit overweight. I mean, it's true. I have a double chin. I didn't even know I had a double chin until recently because I was like this. Oh my God. Look, see right there. But I mean, that's who I am. And there's not a whole lot I can do about it. But if I'm up against someone, that's in their 20s and then they're in their best shape of their lives, in the prime of their lives, just on an attractive level, they're going to kick my ass. And I know it. So, I mean, it's not fair, but it is what it is. And we move on down the line. So anyway, bottom line is personality does matter. Agents' personalities matter. The way agents treat other agents matters, but it's not likely something you're going to be able to divine with something as simple as just a simple listing call. So that being said, I have another thing to discuss today, and I thought it's kind of fascinating because we have another story coming up about it. So I thought that was kind of cool. But what would you do? Like, let me just ask you, what would you do? Like, so we have a survey contingency in the board contract for the St. Louis Association, and what it says is you have the right to a survey. Now this is on the buyer side, but it involves the seller too. You have a right to a survey. If the survey has anything objectionable in it, you have the right to ask the seller to correct it over a certain period of time, and they have the option to say no. And then your only recourse is really you get to leave the contract now with your escrow money intact. Now by the time you're worried about this survey, you've already got money in inspections. You've already got money in the survey. The survey's not free. And it's kind of like, you kind of want the survey to go, well, so I have a house that I was working on. The survey indicates that there are some issues. And what I wanted to tell you is two things. One, working with the other agent, working with the listing agent is important. And then the second thing is we want the seller to fix the encroachment because they know about it and it's not going to be a big issue. But I'm just telling you, as a buyer, if you have issues with the survey, these are things to fix before you actually take possession of the home. Like, seriously, don't wait 10 years down the road and say to your neighbor, hey, you're over my property by 20 feet. That's not going to go well. So, oh my gosh, people just send me texts that are just stupid. I don't want health insurance. Okay. And I don't want to pay somebody a referral fee for a national brokerage. And I get every day, I get the same text. But anyway, on the survey, work on it with your your listing agent, get the stuff taken care of and move on. But I just wanted to point out that, the survey is an issue. You do want to get a survey. I don't get a survey all the time. If it's an established neighborhood, like that's been there for 50 years, I don't care. But certain properties, you need to get a survey. Let's move on. I saw something on Twitter I wanted to share with you. I thought it was hilarious. It's not appropriate, I guess, but I think it's something I wanted to share. Do you ever, I got it messed up. Let me fix this. Have you ever seen the site Best of Next Door? Because I think it's freaking hilarious. I laugh every day about it. And so this is what was on there today. I'll read it to you. It says, found orange male cat, huge balls. Says, anyone missing this boy? He's been hanging out at our house on Mulberry. Very loud talker. Clean. Largest set of testicles I've ever seen on a cat. I love it. Always have. I thought it's hilarious. That's all I have on Twitter today, but I just thought that was funny. I tweeted it. I hope you follow me on Twitter. Am I the best? Am I the best Twitter personality? No. But I try. I try to bring things like this that I think are hilarious, and hopefully you have a sense of humor. For those of you who don't have a sense of humor, don't call me. You're not going to be happy. I like to laugh all the time. When things get serious, I like to make things fun and light. I really do. So I'm not the best person to talk to. If you want to be Mr. Serious all the time, and not have a sense of humor and not smile, I'm not the agent for you. So not that you were thinking about calling me anyway, but if you were, just go on down the road and find somebody serious that puts up with your silliness. Because if you can't laugh, then what's the point? Moving on. This was in the Google Trends, and I thought it was fascinating because, I don't even know. So let's talk about it. It says, fall in love with Wingstop's new chicken sandwich. Offered in 12 bold flavors, now available nationwide. Now, look, we talk about the chicken sandwich. Where do you rank your chicken sandwiches? I mean, I have to believe that Chick-fil-A is number one for most people. But then I'll tell you, I don't eat any other chicken sandwiches besides Chick-fil-A. My stepson loves Popeye's chicken sandwich. Like, he thinks that's just fantastic. But McDonald's, they came out with a chicken sandwich, and it's pretty good. My wife says, I'm only going to eat a chicken sandwich from Chick-fil-A. And then I was reading that Burger King had one. I didn't even know they had a chicken sandwich. But I know that Breadco, or Panera Bread, for those of you who don't live in St. Louis, they have two outstanding chicken sandwiches, according to my wife and the girls. They think pretty highly of the chicken sandwich at those places. Now, I don't know any of them that have 12 flavors. 12 flavors of chicken sandwich. Now, look, there were articles about this. I just went straight to the press release because, I don't know, why not just get it from the first source? So here we go. It says, the flavor experts, I did not know that Wingstop was the flavor experts, but they're giving away 100,000 free sandwiches to fans who split from their current chicken sandwich and commit to finding a new favorite. Here we go. It says, Wingstop is questioning consumers' current chicken sandwich tastes and calling for a breakup in a world of boring breaded sandwiches with only plain or spicy to choose from. By the way, the Chick-fil-A spicy chicken biscuit in the morning with a Coke. I mean, I love it. I love it. It's tough for me to decide I love the Egg McMuffin with a Coke as well. Between those two, though, I don't think you can go wrong. But anyway, let's continue. It says, Wingstop is debuting their signature chicken sandwich in restaurants nationwide today with 12 mouth-watering flavors to choose from. 12. That's the thing that I don't even understand. They got 12 different flavors. It says fans will be begging to split from their current and tired weekly lunch date to get their hands on Wingstop's crispy chicken sandwich that's hand sauced and tossed in a lemon pepper punch, OG hot kick, mango habanero heat, or hickory smoked barbecue bliss, to name a few, served with the brand's iconic ranch for dipping. Well, I just don't know. I don't want a lemon pepper punch. It doesn't seem like something I'd enjoy. Hand sauced and tossed, that doesn't make me want to eat it more. I would prefer someone use a tong. It just seems more sanitary. I don't even understand mango. I mean, it's just, it's 12 flavors for me is just too much. I'm just going to put it out there. I mean, for me to try every sandwich, that's 12 sandwiches. At like, God only knows how expensive they are. So let's just say $4.50 a piece, $5. What do you command, like 50 or $60 to chicken sandwiches to try them all? Ugh. It says, knowing that breakups are hard, Wingstop is here to make the split easier. Simply swipe right over to chickensandwichsplit.com to pen a breakup letter, and the first 100,000 fans to make their split official before September 5th will receive a code for a free Wingstop chicken sandwich. It's just that simple. So you're telling me I have to go online to chickensandwichsplit.com and I have to say, look, I liked you Chick-fil-A chicken sandwich, but I'm going to go to a chicken sandwich that I've never tried before at Wingstop for free. It just doesn't seem like a good plan. You should at least try the chicken sandwich first. And then maybe even try all 12 because, you know, it's not really fair. Like, look, if Chick-fil-A came out with 12 different sandwiches, you know, then I could understand. Like, now we're fighting fair, but like Chick-fil-A had theirs chicken sandwich, and then now everybody else is jumping on the bandwagon, which is fine. Side note, Burger King used to have that chicken sandwich that was like a rectangle. I didn't really. That was years ago. In fact, one time I got it. There used to be a Burger King on Watson. And what's funny is that it's not there anymore. It's actually like a retaining wall for a Walmart where the place was. But one time I went through the drive-thru and I guess they didn't hear my order correctly. And I came home and it was a chicken sandwich. And I was like, this is awful. So it had to been when I could drive. Anyway, the nationwide launch of the Wingstop chicken sandwich is an opportunity to bring new guests to the brand by proving our position as the flavor experts. Easy. I don't know that I want to be a flavor expert. And reward our existing fan base by putting menu innovation on center stage. Menu innovation on center stage, says Stacy Peterson, Wingstop's chief revenue and technology officer. Wow, she's got two positions, revenue and technology. The Wingstop chicken sandwich doesn't just come in one flavor. Fans can choose from 12 bold signature flavors. We're so confident in the product that we're incentivizing fans to split from their current chicken contender and find a new favorite chicken sandwich at Wingstop. Like, can you believe that, like, understand, like, hot wings were like the name of the game, like, for years. Like, I like a good hot wing. Wife doesn't like hot wings. She doesn't like anything spicy. But anyway, they were, I mean, just for years, it was so, I mean, even McDonald's was trying to do wings, and it was just, now it's a chicken sandwich. It says the brand prides itself on cooked to order, hand sauced and tossed products. Again, I prefer you just use a tongue, maybe even a spoon, whatever. Just don't put your hands in my food. Where each meal is specially crafted to guests' liking, like the Wingstop chicken sandwich is no different. The sandwich is the full package with a toasted bun and crunchy pickles. You know, you don't want, I don't know, mushy pickles. I get that. With complementing whichever iconic flavor fans choose. And what's more, the flavor experience is taken up a notch when dunked in a side of Wingstop's iconic scratch-made ranch. Like, it doesn't even sound appetizing to me. It says whether to on the go for lunch or treating the family to Wingstop for dinner, the a la carte Wingstop chicken sandwich with a dip costs only $5.49. So I was wrong. I was at $5. I missed it by 50 cents. Fans craving the combo can get the sandwich and dip alongside hand-cut fries and a drink for just $7.99. A breakup has never been so easy. There's like, for more of this, go to Wingstop. I'm not going to go there. I don't know, man. What are you going to do? Are you going to fall in love with Wingstop's new chicken sandwich? I mean, I just don't. I just don't understand. 12 sandwiches to choose from. I just don't know. I don't know how to work a Wingstop. We have them, but it's a fairly new franchise for us, and I just never really. My wife, like I said, doesn't even like the spicy wings, so we can't get those. You tell me. Put it in the chat. Do you like? We in St. Louis do pizza and wings. I don't know why. Like, so all of our pizza places have wings, like Umo's, and like Fortel's doesn't have good wings. No offense. I don't know. I was just curious what you thought. Like, I don't even know if Alicia's is still in business. Cecil Whitaker's, don't know if they're still in business. But yeah, I have to see if Cecil Whitaker. One of their stores is not there anymore, and it made me kind of sad. But anyway, pizza and wings is like totally normal for us. I don't know if that's the case the rest of the country or if it's just us. Put it in the comments. Let me know. I guess we should be getting on to real estate related things. Let's go to that next. You know, I've talked about Compass. We had a special on Compass missing their earnings by a ridiculous amount. And at the time they said they're going to cut expenses. And at the time I said, I read 3 different articles, and one of them was like, look, their chief technology officers, like, they're going to slow down on technology. That's where the first place they're going to slow down. That he's off the hook. I mean, he's done. Sure enough, August 26th, this came out. It says Compass CTO Joseph Sharash is parting ways with the firm in its latest bid to manage expenses and become profitable. According to an August 17th regulatory filing, Sharash sold more than 222,460 shares between August 17th and 19th and collected $868,000 in proceeds. I'm telling you, like, let's look. Let's see if I can get, here we go. Do that. And then I'm going to do, yeah. Let's look at Compass's share price. If this is indeed, let's go here. Like, you know, hopefully this is the real estate. Let's see if it's profile. Let's look at profile here. They're a technology company, so I might not have the right one. Oh, real estate brokerage services in the United States. So yes, this is correct. Okay, so the guy's not there anymore. Okay, but wow, you don't even see a chief technology officer there. But let's just look at the stock, because do you remember we had that story? We had that story about how they did Redfin and Zillow and said that perhaps this was portending bad things to come in the marketplace because their stocks were down. And I said, I don't think that Zillow is really the same as Redfin. And so let's take a look at this. Like 1 year ago, they debuted at $19, it appears. Okay. And so this company, let's just say, hey, we want you to come work for us. Okay. We want you to come work for us. And you say, you know what? I don't know. And they said, we're going to give you stock options. You say, okay, that sounds like fun. And you say, like, the stock's going to go up because the business model is great and we're going to do wonderfully. So this guy and everybody else goes and works there, and then look at how it goes. I mean, just falling to today, what was the open? It was the previous close was $3.11. Right now, it looks like at close, it was $2.86. It's going the wrong way. We started at 17. And it says here the fair value on, I mean, this is crazy. It says it's way overvalued. The earnings per share is minus $1.17. It's not good. Doesn't look, nothing about this looks good, but it's got a $1.23 billion market cap. Anyway, this fella here, I'm going to close that. This fella here He's like, well, you're quit, like you're done. You need to sell your shares. And so he does. He's like, well, they would have been worth like $17 and now they're worth like $3. So he didn't make that much money. Like, if you think about it, more than $900 million has been pumped into Compass's technology platform, according to Bloomberg. And while the technology has been favorably viewed by agents across the company, it hasn't made a difference in the company's profitability. That's because real estate is all about personal connections. Who do I know? Do they need to buy or sell a house? If they're in that situation, would they trust me to be the person to do that over somebody else? Is your technology going to fix that problem? Probably not. And by the way, Contextually bought. Oh, my apologies. Compass bought Contextually. I had Contextually as my CRM. When they bought Contextually, I had to leave. So anyway, let's continue. It says the money has gone to acquire tech-focused companies like the customer relationship management or CRM platform Contextually. Now look, Contextually was like a low-cost CRM. I think it costs like $15 a month to have. It doesn't do anything more special. I have less annoying CRM, and it's like $10 a month, and it does the exact same thing that Contextually does. So that's stupid. Glide, which is used by the California Association of Realtors to digitize the administrative paperwork of home sales. So they bought that. But again, that's California Association of Realtors. What good does it do? What good does it do a Compass agent here in St. Louis? And then Modus Technologies, a title platform that Compass shut down last month, is part of the company's sweeping austerity measures. Now, look, you bought a company and you shut it down. That's not a good plan, especially like, are you familiar with AutoCAD? Like, they buy companies and then they just integrate them in their own business and then they move on down the road. And then they don't have any competitors because they just buy everything. That's smart. Buying stuff that's not in your wheelhouse, like if you're a real estate brokerage, which you are, whether or not you're going to say your technology company is, great, but you should probably be buying brokerages and naming them like Berkshire Hathaway. That's how they grow. Now look, Compass is probably the largest brokerage in the United States right now. So I don't like, they don't need to be taking my advice. Okay. I mean, really, but I mean, this is just the way I see it. It says it also went to hire a team of over 1,500 experienced product and engineering professionals based out of our innovation hubs in New York, Seattle, Washington, D.C., and several cities in India. According to a 2021 annual report, Compass declined to specify for this article how many tech employees were laid off as part of its June layoff. So again, I mean, you've basically got a CRM and administrative, you got a transaction coordinator committed to a tech platform. It says, however, they did assure RealTrends that they are committed to its in-house technology platform. When asked if they would consider making a third-party platform like Remax did, a company spokesperson responded, absolutely not. We have just restructured our tech leadership team to report to our chief operating officer, who previously ran Amazon Prime Video tech team. Again, now we've got a guy running, the chief operating officer is running Amazon Prime Video. What does that have to do with real estate? Like, at some point in time, there's this story, okay? There's this story that says, and this is true in all real estate brokerages when they want to make money, they say, we have the technology. In fact, this brokerage, Compass, is saying, we don't even do real estate brokerage. We don't even help buyers buy homes and sell homes. We provide technology to make agents' lives easier. Why do they do that? Well, you don't have to quantify it. You don't have to. Technology is not something you have to quantify. How much technology is too much technology? How much technology is not enough technology? The word is nebulous, but you can sell it. Technology sounds good. It sounds really good. Like, oh, I want to be invested in technology, because real estate doesn't have any technology in it. It's a story to be sold to people, and it works. You couldn't go to Wall Street and say, hey, we're going to build a brokerage that focuses on recruiting agents. Okay. We're going to pay agents great splits. Okay. And they're going to want to come work. We're going to pay them bonuses to come work for us. That's what and you know what? That's what Compass did. But that wasn't the story that they told. You see what I'm saying? You have to have a story that sells. Anyway, it says, he went on to say, with the successful rollout of the Compass technology platform, Compass now enters its next phase with the largest technology team in our industry, focused on enhancing and building tools that will help over 28,000 agent entrepreneurs grow their business. We're excited to announce that Kendra Schimmel and Shay Artsy will help the roles of head product and head of engineering. It's like we're just going to keep doing what we're doing. And by the way, what does the largest technology team in the industry do for you? Nothing. I hate to say it, but again, real estate, unless you're going to somehow find out how to bridge the relationship between your buyers and sellers, you're not going to get anywhere with technology. I mean, sending somebody a newsletter every month is not technology. We've been doing that since the dawn of time. Cost cutting at Compass, which ranked number one in sales volume in the 2022 Real Trends 500, struggled to earn a profit after losing $101 million in the second quarter this year. Look, that's just it. How do you have all this money behind you, okay, in technology, and you still can't make a profit in the best market we've ever had in our lives? It's not a good sign going forward. The firm attributed the net loss to higher expenses related to strategic business initiatives, non-cash stock compensation, depreciation, and amortization, as well as restructuring charges due to the cost-saving actions announced on June 14th. The brokerage largest expense was for commissions and other related expenses, which came at nearly $1.62 billion. Look, commission is where you guys were trying to beat everyone else. Maybe you can't do that. Maybe you can't afford to pay out a nice commission, a nice fat commission to your agents. I'm just saying, I mean, I know what the splits are. I know how the business is run, the real estate brokerage business. And I'm telling you, like, what are you going to do? Go against Remax? You got a desk fee and that's it? 100% commission goes to the agent? I don't know. Seems like a bad idea. It says Refkin recently. Now, I didn't see anything named Refkin in the whole thing, but it says Refkin, who's the CEO, recently announced a pivot in the business strategy called their Plan for Transformation, noting that the firm will no longer offer recruitment incentives. Yes, that was where they were making their money. They brought over all the good agents. It says Compass has long been known to pay incentives and sign-on bonuses to incentivize agents and team to join the company. Look, now why do I want to go work at Compass when I could work anywhere else? In June, Compass announced a layoff of 10% of its workforce, or 450 workers. I mean, this is problematic. I don't know what to do. I mean, I'm watching these companies that keep like between Redfin, telling me that my business model is terrible because we should be paying our agents a salary, but yet they never make money. And then I have Compass, which shows us that if you pay and give incentives to agents, they are mercenaries. They will go where the money's the best, but that still doesn't make a profitable brokerage. It really makes you wonder, or it really makes me wonder, like, what's the point of it all? Really? I've often thought that the point of this company in particular, Compass, Redfin, is to basically run losses long enough that they squeeze everyone else out of the business, and then they have a better chance of being profitable because they'll just, by their very nature, do more deals than anyone else. Maybe they're allowed to raise. Well, Compass has said that they're gonna try and cut their commissions to their agents. They've said that in the past. So that's, now you're going to go there for a fat deal, and then 10 years later, it's not going to be the same deal. That's not a good way to do business, in my opinion. But the more business that they do, in theory, the better they would be. The problem with that is real estate agents really are an interesting breed of people. For the most part, we're very independent, very suspicious of large companies in general, competitive. And this, you're never going to have a bunch of agents that decide that they're going to go to one brokerage and stay there. That's just not how they operate, or at least how they have in my lifetime. Maybe that will change. Moving on. Wanted to go over this. This is the Deerwood Realty STL site. It's where you can find some real estate news. If you're very interested, and we'll do the replays. We have our YouTube videos. We have our podcast. If you did want to just check one thing, if you wanted to check mortgage rates on a 30-year fixed, the survey right now today at 5.99%, higher than yesterday at 5.95%. 30-year fixed and a conventional mortgage at 5.99% is not good. Not good. Now you look at Freddie Mac, and that's updated weekly. They've gone from 3.10% to 5.13% on a 30-year fixed. There may be a time in the future where it makes more sense. We've gone conventional loans now for 2 years, okay? Because we were fighting people with cash offers, and the conventional loans just gave us more flexibility. But I'm telling you, you can only afford so much. And if you're going to get to a point where Freddie and Fannie have a lower price on a 30-year fixed, that's where people are going to move. It's wild. It's a wild situation right now. You might say that the reason why the mortgage rates have raised is because of the increase in interest rates or borrowing in the Fed funds rate. You wouldn't be wrong. Just know that it doesn't happen like right away. So when the Fed raises their basis, if they raise their lending standards, it may not hit mortgages the same way. It's certainly not going to go up. Like if they went up 75 basis points, you don't have to expect a corresponding increase of 75 basis points. They are related, okay, but they are not in lockstep. Moving on down the road. Not good. It just went white. Oh, here we go. Okay. What would you do? What would you do if someone put a neighbor on your property? Put a neighbor on your property. Put a fence on your property. Like, that wouldn't be good, right? So I'm going to show you the TikTok, and then we'll go back. I really like the ability in TikTok and those kinds of, oh God, I really messed up. Let's go back. Okay, here we go. The article says, homeowner takes revenge after neighbor builds fence through part of his garden. And so let's look at the TikTok because it's going to be based on this. Uh-oh. Wait a minute. I got to do this because I don't want to get a copyright violation. What are we going to do? We're not going to let me. There we go. Okay, so here it is. Like, I'm going to go back to the beginning. Can you see this? Let me make sure you can see this. Okay, good. Here we go. So here it goes. So it says, our neighbor put up a fence on our property. Okay. And so they're using a chainsaw to cut it down and put it back on their property. It says, my neighbor's fence is on our property. We've asked them to partner with us to correct it. They refused. So here we go. Or so here we are. Now, I do want to say that I have, pause that bad boy. I have been in a situation. I had a friend. I have good friends. Bought a house. The guy was like 25 years old. They noticed an encroachment on the property, but my friend at the time was the buyer, and he wanted to put up his own fence. And there was like a garden that was in his way. So he just literally put the fence right across his line, cut off the garden, and that was it. Now, in that case, the neighbor really didn't get that mad and wasn't really a jerk about it. Okay. They went on to be good friends. Everything was fine. The logic was, look, if you go and tell them they have to move their stuff, that's just going to piss them off. And so if you just move it anyway, maybe that helps. I don't know. I've not been in a situation where there's been an encroachment on my property. I would try to work with my neighbors. I've always thought that having a good relationship with your neighbors is like the most important thing when you live somewhere, especially in a subdivision. Last thing you want to do is look at your neighbor every day and be like, "Well, I hate that guy." And with good reason. There could be like legitimate reasons why you don't like your neighbor. So anyway, let's continue. It says a homeowner says they felt they had no other choice but to take action on their own hands after their neighbor built a fence stretching across part of their garden, cutting a fair chunk of their lawn away. They say they initially tried to be civil with the neighbor, requesting they put the fence back on the property line where it should be. However, they apparently refused. Left with few other options, the homeowner decided to have the offending fence dismantled plank by plank, stacking the lumber up neatly for their neighbors. Footage shared on TikTok shows two men taking the fence down. And while some people say they went too far, follow-up videos show just how much land the neighbor had taken from them. Now, it's easy to sit online and judge others. Okay? And let me just put it in my own perspective. When I write a blog post, I haven't wrote a blog post in 2 years, but when I did write blog posts, somebody could come at me and say, well, you missed this point or you didn't do this right. Yeah, it's easy to point out my mistakes, but you never, ever wrote something out yourself. So I don't really respect or care what you think. You go write an article and let me critique it because I guarantee you it's not going to be perfect. So that's number one. So in this case, it's easy to sit behind, and especially on TikTok, to write some sort of comment, like some 13-year-old dude is going to write a comment like, I would just kick their ass or something. And it's like, come on. Just be reasonable. So I don't have any respect for those comments. Unless you're in the situation, you have no idea what to deal with. It says the homeowner who goes by the username such and such. Oh gosh, I can't even close that. Can I? I don't know. Anyway, let's just keep going. Shared footage of the men removing the fence together, writing, my neighbor's fence is on our property. We've asked them to partner with us to correct it. They refuse. So here we are. In a follow-up video, the property lines are exactly where they are supposed to be. Those saying, oh, I would have taken a free fence. Would you also just take depreciation on your property? And yeah, I don't think you guys understand. If someone takes your space, okay, and if they hold it and if you don't make notice that fence is on your property, they can take your property over after, at least in the United States for the most part, through eminent domain. 20 years, you got it. It's your property. It says the original video has clocked at more than 12 million views and 377,000 likes, with many followers unable to believe the cheek of the neighbor. One approving person commented, normalize not allowing your neighbors to run over you for easing tension. If their fence stays there, they gain that property. That's exactly right. Addressing those who claimed they personally wouldn't mind getting a free fence. Another remark, y'all don't understand. If they allow the neighbors to fence that property, it becomes their property. The one taking it down loses equity. That's right. It says the third person wrote, I get that they wanted the fence straight for aesthetic reasons, but that was a lot of land in the back there that they tried to claim. I know. You really, really need, if you own the property, that's on you. You need to protect your property. I think they did the right thing. Especially when it was just say you're there and they're there and they build a new fence and it just takes off part of your property. That's a lot different than you moving there and the property already had an encroachment on it. That's a lot different than you going out there and putting a new fence up. This was bad. But I feel sorry for everybody. Like I don't wish this on, what if they paid contractors to do it and the contractors screwed up? Now they have to go and sue the contractors. Yeah. Okay. This is the last article I wanted to share with you tonight. I'm very suspect about the real estate business. I've always been. It's filled with personalities. But just one thing that sticks out more than anything else for me is this, how do I put it? The market's really doing well for sellers and buyers in the sense that like there's record numbers of transactions at record prices. And so if you're affiliated with the real estate market and the real estate industry and you're failing right now, like how bad are you going to do when things really suck? Because they will at some point. And I've seen this, and I want to go over this because I want you to understand what's going on here. It says U.S. mortgage lenders are starting to go broke. What is this about? How can that be? How can a lender go broke in the best time ever? It says the U.S. mortgage industry is, and by the way, I have friends in the mortgage industry, and I know some companies are actively recruiting these people from these failed businesses. I'm not going to point out the businesses that I know that suck, that are lenders, where they're getting poached from because they're just going to go out of business anyway. But this is real. There's certain things that you can never know if they're real, but you read the story. For example, let's just do one. I have no idea for Israel. I have no idea what happens in Israel daily. Okay. If I read something, then I have some idea, but I don't know if it's true. Okay. I don't know if it's true. So I'm in this business. I've seen what's going on, and I believe it to be true based on what I see. My greatest ability for you is to be able to tell you, like, yes, this article seems to be true because I'm seeing it with my own eyes. Okay. Rather than you just read something random and not have any idea if it's true or not, I can tell you, yes, this is something that I'm seeing with my own eyes. In some ways, though, I won't always see what everybody else is seeing. For instance, everyone says the market is going down, that house prices are going down. The statistics indicate that the prices are going down. Yet, I had a condo this weekend that I wanted to show my buyers, and it was already gone within 22 hours of it being listed. And I'm guaranteeing you that it's going for over asking. So is that an anomaly? This is the world I'm living in. I mean, I see many, many more listings coming to market right now. I see many, many more listings coming back on the market after going under contract the first weekend. That's a situation you don't really want to be in, but that's what's happening. So these didn't happen. These things didn't happen 3 months ago. Okay. It just didn't happen. So yes, there is change going on in the marketplace, and I'm telling you what I see. But what I see may not exactly line up perfectly with what's going on. And so let's continue. I'm sorry. It says the U.S. mortgage industry is seeing its first lenders go out of business after a sudden spike in lending rates. And the wave of failures that's coming could be the worst since the housing bubble burst 15 years ago. There's no systematic meltdown coming this time around because there hasn't been the same level of lending excesses, and because many of the biggest banks pulled back from mortgages after the financial crisis. But market watchers nonetheless expect a string of bankruptcies broad enough to trigger a spike in layoffs in an industry that employs hundreds of thousands of workers and potentially an increase in some lending rates. More of the business is now controlled by independent lenders, and with mortgage volumes plunging this year, many are struggling to stay afloat. The non-banks are poorly capitalized, said Nancy Wallace, chair of the real estate group at Berkeley Haas, the business school at the University of California, Berkeley. When the mortgage market tanks, they are in trouble. So what they're saying is the mortgage business is controlled by independent lenders that are not associated with a bank. Okay. So they cannot use the deposits in the bank to, how do I put it? To that it doesn't, there's nothing on their balance sheet that shows deposits, like significant deposits. So they're in a bad spot. That's what the article says. That's not what, I mean, that's all I'm reading here. That doesn't mean that banks are the best deal. Okay. That doesn't mean that. It says in 2004, only a third of the top 20 lenders for refinancings were independent firms. Last year, 2/3 of the top 20 were non-bank lenders, according to lendingpatterns.com, which analyzes the industry for mortgage lenders. Since 2016, banks have seen their share of the mortgage market shrink to about a third from about half, according to news and data provider Inside Mortgage Finance. Now, I am associated. I have one lender one lender that I know works for a bank, and one lender I know that works as a broker. And they provide great service, both of them. I have no issues with it. But I do know that in that business, okay, let me just tell you, like, you could have the best lender in the world, and if the bank decides they want to limit their exposure to mortgages, it doesn't matter because that lender is going to be out of there. And these companies make these decisions off the, in the heat of the moment. They're just like, you know what, we're exiting this business. Our exposure is too high. And they don't even tell the people that, they don't even tell their lending officers. They don't tell anybody. They just kind of keep it quiet, and then the business dies. Anyway, that's why lenders move around, if you wanted to know. It's normally because of that. It's normally because of a conscious decision by management to limit their exposure to mortgages or the mortgage market. Let's continue as soon as I find what I'm looking for. Okay, it says, many so-called shadow lenders will emerge from this slowdown relatively unscathed, but some lenders have already stopped operating or scaled down dramatically, including Sprout Mortgage and First Guarantee Mortgage Corp, both specialized in riskier lending that isn't eligible for government backing. That's another thing. How many of your lenders are just going to turn it over to Freddie and Fannie? Then you have less. Then you have less exposure. First Guarantee, a company that, according to court papers, is majority owned by fixed income giant Pacific Investment Management Co., filed for bankruptcy, saying it's failed after it made loans earlier this year that dropped in value. It was holding on to those loans until it had enough to bundle into bonds and sell to investors, and it had been temporarily funding them with a line of credit. Once interest rates started to climb, lending volume shrank across the industry, according to court papers. That meant the company could no longer find enough new loans to bundle or get enough financing to keep operating, said First Guarantee's Chief Executive Officer Aaron Samples. Firms included Flagstar Bank and Flagstar ate it? That's a shame. And Customers Bank are owed about $418 million, according to court documents. First Guarantee employed 600 people before it filed for bankruptcy in June and made $10.6 billion in loans last year, according to court records. Days before seeking court protection, the company fired 471 workers because it couldn't get enough financing to overcome a cash crunch. They couldn't even pay their workers. Independent lenders gained a toehold in the market because banks pulled back so much after the financial crisis, which started with excessive lending and mortgages. Whatever. Regulators have often encouraged the retreat, and it's still happening. Wells Fargo, the biggest Wall Street firm in the U.S. mortgage business, plans to shrink its home loan empire. Unlike banks, independent lenders often don't have emergency programs they can tap for financing when time gets tough, nor do they have stable deposit funding. They depend on credit lines that tend to be short-term and depend on mortgage prices. So when they're stuck with bad assets, they face margin calls and potentially go under. Interesting. Oh, not helpful. It says, many independent lenders have managed their risk well. And for lenders that work extensively with government-backed companies like Freddie and Fannie, the situation is less dire. They can often get emergency funding from government-sponsored enterprises if they run into difficulty. But those lenders that make riskier loans and work less often with the GSEs have fewer options when they face margin calls. Part of the reason these companies are distressed is because the loans can't go to GSEs for funding. Their options for funding are more limited, which is especially painful when financial conditions are tightening. Many other lenders have seen the value of their loans drop. The Federal Reserve has tightened rates by 2.25 percentage points this year in an effort to tame inflation, and 30-year mortgage rates have surged above 5% for government-backed loans. That's close to their highest levels since the financial crisis, from about 3.1% at the end of last year. That's beaten down the value of home loans made just a few months ago. A mortgage made in January and not eligible for government backing could have traded in early August somewhere around 85 cents on the dollar. Lenders usually try to make loans worth somewhere around 102 cents to cover their upfront costs. For a lender whose loans dropped to 85 cents, the losses can be debilitating, even if they aren't realized yet. On top of that, businesses broadly plunging. Overall, mortgage application volume has plunged by more than 50% this year, according to the Mortgage Bankers Association. These business conditions are spurring banks that provide lines of credit known as warehouses to make margin calls and cut credit. So you could be operating fine, but if you get a margin call, you're toast. Like, you've got nowhere to go. It's not good. The warehouse lenders in this industry seem to be extremely on top of things in this downturn. Unlike in 2008, said bankruptcy attorney Mark Power, who's representing creditors in the first guarantee bankruptcy. They're making margin calls quickly. So he's arguing that this is a good thing. I don't know. This is a little bit higher level than what I deal with on a day-to-day basis. If one of my lenders like gets fired from a place or let go, they'll go somewhere else and I'll still work with them. Banks have emergency funding they can tap in times of crisis, which can often allow them to stay afloat in hard times, but not always. Emergency financing from the Federal Reserve is usually only available for solvent institutions with a chance of recovering. In the last downturn, so many banks had so many sour loans and struggling assets of all kinds that hundreds failed. Non-banks went bust as well. Go back here. So, am I seeing this in the industry? Well, I'm seeing some lenders go out of business. Yes. I'm more worried for all of the lenders because, again, if you can't make it they couldn't make it once you couldn't refinance stuff because it was too expensive, they couldn't handle it. And so you just need to question, like, and I know this sounds weird, okay, but if your business model is dependent on one thing happening, okay, and it doesn't happen and you go under, that's not probably the best way to run your business. You should be able to weather certain storms. You should be able to capitalize the business in such a way that you can weather storms. That's always been my criticism of Wall Street. Growth at all costs. Like, what if a business shouldn't be growing that rapidly? What if they're burning through cash and they're not going to be able to be solvent? Like, investors pay for growth. Investors pay for stories. But it's just like, eesh. What did we learn tonight? Well, we learned that you want to have a good agent that has a decent personality that you can get along with, but that also they can get along with other agents. Seems obvious, but maybe it's not. We learned that, look, surveys can sometimes reveal problems with properties, and you want to be able to work with another agent. You want to be able to work with the listing agent or the buyer's agent to get the deal done in spite of these issues that may come up with surveys. We learned that, hey, maybe a business model built on attracting agents with great commission splits and sign-on bonuses might not be a good long-term strategy for a brokerage, but it certainly will jog the investors on Wall Street. So, I mean, there's that. We learned that Wingstop has 12 different chicken sandwiches. I mean, really, 12 different chicken sandwiches. And if you write a stupid letter to this website, like that says you left your other chicken sandwich, you'll get a free chicken sandwich. Then we learned, and we talked about it, look, lenders are going out of business. And we finally followed that up right before then with this man that had built a fence on the wrong property, and it was removed by the neighbors. People had opinions. It was on TikTok. With that, I'm going to head on out. Thank you for watching. If you're listening as a podcast, thank you for listening. If you do get a chance, please subscribe. I would really like to get to 100 subscribers. It really would mean a lot to me. I understand if you have like 1,000 different subscriptions, maybe this one doesn't seem to be the right one right now for you, but I would appreciate it. I appreciate all my subscribers, every single one of you. Thank you and good night.